Imagine waking up one morning to find out you just made $144 million while the rest of the world was still trying to figure out what's happening in the markets. Sounds like a fantasy, right? Well, for one mysterious Chinese whale, this became a jaw-dropping reality. This isn't some lucky gamble or insider tip. This is a calculated, ice-cold bet against silver that paid off in ways most traders can only dream about. And today, we're diving deep into how this massive trade went down, who might be behind it, and what this means for you and the future of precious metals. Stick around, because what you're about to discover might completely change how you think about market opportunities. But before we get into the details, do me a huge favor. Smash that like button right now and subscribe to Money Mindset Media, because we bring you the stories that actually matter in the world of finance, trading, and wealth building. Trust me, you don't want to miss what's coming next. So let's set the scene. Silver has always been seen as gold's younger sibling. It's cheaper, more volatile, and often moves in wild swings that can either make you rich or wipe you out. For years, silver bugs have been screaming that it's undervalued, that it's going to the moon, that everyone should be stacking physical silver like their lives depend on it. And to be fair, there have been moments when silver did spike. But here's the thing. Someone out there saw a different story unfolding. Someone with deep pockets, nerves of steel, and access to information most of us can only imagine. This trader, now famously referred to as the Chinese whale, placed an absolutely massive short position on silver. That means they bet that the price of silver would drop. And drop it did, spectacularly. Now, a short position isn't for the faint of heart. When you short something, you're essentially borrowing an asset, selling it at the current price and hoping to buy it back later at a lower price. The difference is your profit. But if the price goes up instead, your losses can be unlimited. It's risky. It's terrifying. And it's exactly what this whale did with silver on a scale that most retail traders could never even touch. We're talking about hundreds of millions of dollars on the line, and the result? A profit of $144 million. Let that number sink in for a second. That's enough to retire multiple generations of a family. That's generational wealth created in a single trade. But who is this person or entity? And how did they know silver was going to tank? The identity of this whale remains a mystery, which is typical in the world of high-stakes trading. Big players don't announce their moves on Twitter or Reddit. They operate in the shadows through offshore accounts, shell companies, and brokerage firms that cater to the ultra-wealthy. What we do know is that this trader is believed to be Chinese, based on trading patterns, timing, and connections to Asian markets. China has long been a powerhouse in commodities trading. The country consumes massive amounts of raw materials for manufacturing, infrastructure, and exports. Chinese traders and institutions have access to real-time data on supply chains, factory output, and global demand that most Western traders simply don't have. This gives them an edge, a big one. So what made silver the perfect target? Well, let's talk about what was happening in the silver market leading up to this massive short. In recent years, silver saw a lot of hype. Retail investors, especially during the meme stock craze, started piling into silver. There was even a movement to squeeze the silver market, similar to what happened with GameStop. People were convinced that if enough retail buyers jumped in, they could force the price to skyrocket. Online forums were buzzing. YouTube channels were pumping out videos. Everyone was talking about how silver was the next big thing. And for a moment, it looked like they might be right. The price of silver jumped. But here's the problem. Hype doesn't last. And when the fundamentals don't support the price, gravity eventually takes over. Our Chinese whale likely saw through the noise. They understood that the silver rally was driven more by emotion and speculation than by actual demand. Industrial demand for silver wasn't spiking. There was no shortage in physical supply. In fact, mining output was steady, and recycling was adding more silver back into circulation. The fundamentals were screaming that silver was overpriced. So while the crowd was buying and pushing the price higher, this whale was quietly building a short position, waiting, watching, calculating. And when the momentum finally broke and reality set in, the price of silver started to fall. And it fell hard. The beauty of this trade wasn't just the size. It was the timing. Getting the timing right on a short trade is incredibly difficult. You can be right about the direction, but if you're too early, you can get crushed by short-term price spikes. You can lose everything before the market finally agrees with you. But this whale nailed it. They entered at the peak of the hype, held through the volatility, and cashed out as silver tumbled. That takes guts. That takes conviction. And most importantly, that takes information. Which brings us to a critical question. Did this trader have access to information that the average person didn't? In the world of big money, information is everything. It's not about illegal insider trading, although that does happen. It's about having better data, better analysis, and better connections. Institutional traders have access to proprietary research, advanced algorithms, and relationships with suppliers, miners, and manufacturers. They know what's happening on the ground before it shows up in official reports. They can see demand trends shifting weeks or even months before the public catches on. This Chinese whale almost certainly had access to that kind of edge. Maybe they had data showing that Chinese manufacturers were cutting back on silver usage. Maybe they saw inventory levels rising faster than expected. Maybe they had intel on central bank policies that would hurt precious metals. Whatever it was, they had conviction. And conviction backed by information is a deadly combination. Now let's talk about what this means for the average investor. Should you be shorting silver? Probably not. Unless you have millions to risk and access to the same level of information, trying to replicate this trade is a recipe for disaster. But there are lessons here that anyone can apply. First, don't follow the hype. Just because everyone is talking about an asset doesn't mean it's a good investment. In fact, when an asset becomes a social media sensation, that's often a red flag. Second, understand the fundamentals. Price is what you pay, value is what you get. If the price of something is being driven by emotion rather than fundamentals, be cautious. Third, timing matters. Even if you're right about the direction, being too early or too late can destroy your returns. And finally, respect risk. Shorting is inherently risky. One wrong move and you can lose everything. This whale won big, but for every winner, there are countless traders who got wiped out trying the same thing. It's also worth considering the broader implications of this trade. When a single trader can make $144 million betting against an asset, it shows just how much power large players have in the market. Retail investors love to talk about democratizing finance and leveling the playing field. And while technology has made it easier for regular people to trade, the reality is that the big whales still rule the ocean. They have better tools, better data, and deeper pockets. They can move markets. They can wait out volatility. They can take positions that would bankrupt a retail trader 10 times over. This isn't meant to discourage you. It's meant to make you think strategically. If you're going to play in the same markets as the whales, you need to understand the game they're playing. Let's also talk about silver's future. Just because this whale made a fortune, shorting silver doesn't mean the metal is dead. Silver still has important industrial uses. It's used in solar panels, electronics, medical devices, and more. As green energy and technology continue to grow, demand for silver could increase. But that doesn't mean the price will skyrocket tomorrow. Markets are driven by supply and demand, sentiment, and macroeconomic factors. Right now, with interest rates still relatively high and the dollar strong, precious metals face headwinds. But if we see a shift in monetary policy, a weakening dollar, or a surge in industrial demand, silver could rally again. The key is not to get emotional about it. Don't marry an asset. Don't fall in love with a narrative. Stay flexible, follow the data, and always be willing to change your mind when the facts change. Here at Money Mindset Media, we always encourage you to think like a strategist, not a gambler. The Chinese whale didn't make $144 million by getting lucky. They made it by doing their homework, taking calculated risks, and executing with precision. You might not have millions to throw around, but you can adopt the same mindset. Educate yourself. Stay disciplined, manage your risk, and never stop learning. The markets reward those who are prepared and punish those who aren't. So if there's one thing you take away from this story, let it be this. Success in trading and investing isn't about following the crowd. It's about thinking independently, understanding the game, and playing it smart. Before we wrap up, I want to hear from you. Do you think this Chinese whale had insider information, or was this just brilliant analysis and timing? Are you bullish or bearish on silver right now? Drop your thoughts in the comments below. Let's get a conversation going because the best insights often come from the community. And if you found this video valuable, don't just watch and leave. Share it with someone who's into trading or investing. Share it on your social media. Help us spread the word because Money Mindset Media is all about empowering people with real knowledge, not hype. The more we grow, the more stories like this we can bring to you. Now let's zoom out for a second and think about the bigger picture. This trade is a perfect example of how markets really work. The media loves to tell you that markets are efficient, that prices reflect all available information, and that you can't consistently beat the market. But stories like this prove otherwise. If markets were truly efficient, no one would make $144 million on a single trade. The truth is, markets are messy. They're driven by human emotions, algorithms, geopolitics, and power plays. And those who understand this complexity are the ones who profit. This whale understood that the silver rally was unsustainable. They understood that when everyone is on one side of the boat, it's about to tip. And they positioned themselves to profit from that inevitable correction. Another fascinating angle is the role of China in global markets. Chinese traders and institutions are becoming increasingly influential. They're not just participating in markets, they're shaping them. From commodities to currencies to equities, Chinese money is everywhere. And as China continues to grow economically and technologically, we're going to see more and more of these massive trades coming out of Asia. For Western investors, this is both a challenge and an opportunity. The challenge is that you're competing with players who have different information, different strategies, and sometimes different rules. The opportunity is that by paying attention to what Chinese and other Asian traders are doing, you can gain insights into where markets might be headed. Follow the smart money, watch the flows, and always be asking yourself, what do they know that I don't? So what's next for this whale? Well, $144 million is life-changing money, but in the world of high finance, it might just be another win in a long series of profitable trades. Chances are, this trader is already looking for the next big opportunity. Maybe it's in gold, maybe it's in oil, maybe it's in a completely different asset class. The point is, successful traders don't rest on their laurels. They're always hunting, always analyzing, always ready to pounce when the opportunity presents itself. And that's the mindset you need to cultivate if you want to build wealth in the markets. It's not about making one big score and retiring. It's about consistently making smart decisions, learning from your mistakes, and staying in the game long enough to compound your gains. As we come to the end of this deep dive, remember that the story of this Chinese whale is more than just a headline. It's a masterclass in strategy, risk management, and market psychology. It's a reminder that while retail investors have more access to markets than ever before, the big players still have significant advantages. But it's also a reminder that with the right knowledge, the right mindset, and the right discipline, anyone can improve their financial outcomes. You don't need to make $144 million to change your life. You just need to make smarter decisions consistently over time. Thank you so much for watching this breakdown on Money Mindset Media. If you haven't already, hit that subscribe button and turn on notifications so you never miss an update. We're building a community of smart, strategic thinkers who want to understand money, markets, and wealth at a deeper level. And we want you to be a part of it. Drop a comment, share this video, and let's keep the conversation going. Until next time, stay sharp, stay strategic, and keep building that money mindset.